Thank you for waiting. Thank you for coming today. Now we would like to begin the announcement of FY2016 first quarter consolidated business results for start today. Let me introduce the presenters today. On the left, you will see CFO Koji Yanagisawa. And on the right, we have Go Saito, General Manager of Business Administration Division. So there will be two presenters today. So let me introduce today's schedule briefly. First of all, we would like to have the CFO Koji Yanagisawa explain the business results for FY2016 first quarter. Then after that, we would like to have a Q&A session. And we plan to finish this session at 6 p.m. So if we can jump right in. Mr. Yanagisawa, please take the stage. Thank you. Good afternoon. If we can begin right away, and I would like to introduce the first quarter results for FY2016. This is just a summary that you'll see on the screen of the materials that you have on hand. But first, before we begin, we would like to show you a video first, and I will explain that later, but where the application has, we started promoting that in the US, and we created a movie for that. And I think that there's a really popular game recently, and we don't really do that. We don't play that game, but we have Saito Go. I don't know if you noticed. It says Saito Go in the beginning, but putting that aside, I will go into detail about the Wear app. So we showed you the video, but overview, getting into the overview of the FY2016 transaction value was 42.2 billion, up by 27% year-on-year. Operating profit was 5 billion, up 34% year-on-year. Operating profit margin was 11.9%, up by 0.7 points year-on-year. Usually, the first quarter is quite cost-heavy, but the OP margin was 11.9%, which is for the first time since FY2013 first quarter. The OP margin back then was 11.8%. Although our corporate plans, which are undisclosed, we done better than we had expected. But as we mentioned at the beginning of the year, the targets are quite high that we've set. So we believe that the challenge lies ahead in the second half of the year, so we shouldn't become overconfident. Next, page 4 of your documents. So this is the transaction value growth rate per quarter. As you can see, since the third quarter of last year, we've issued brand coupons aggressively, and this has helped accelerate the growth rate. So the first quarter, we've seen high growth as a result of the brand coupons as well. And UU growth has been stable at 15 to 20%, but the conversion rate has improved significantly by almost 30% year-on-year. And the brand coupons and the promotions, of course, key factors contributing is lots of new shops that we welcomed last year, and also we installed a new CRM system. And by changing the CRM system, this has positive effects. And the third effect is the brand point coupons, which has resonated very well with customers and the brands. So brands have been more willing to give us more inventory. And so the first half of the year, we would like to continue the initiatives that we started last year, because it hasn't been a full year yet. But we hope that we will continue with our initiatives, so we believe that the growth rate will continue in the first half of the year. So after a full year, in the second half of the year, I think this will be a challenge for us. So we will continue to do our best in the second half of the year. Next, page 5 of your deck, the decrease analysis of the operating profit. So we have better revenues and then better operating profits, so 1.9 billion more profits. And in terms of cost, the payroll increased by 0.9 points. One of the reasons is that the ZOZOTOWN business has grown, so the proportion of the ZOZOTOWN business has grown. Therefore, we have incurred higher operation costs. And also, Aratana became a consolidated subsidiary from the second quarter last year. So the payroll has increased. Having said that, we hardly did any promotions this quarter, so this has decreased by 0.3 points year on year. So we hardly did any promotions, but we will get into this in detail. But as the lower purchase amount per shipment has decreased, so the costs for consumables and supplies have increased by about 0.5% or 0.5 points. So as a result, the gross margin has grown from 30.6% to 32.6%, and the SG&A has increased from 19.4% to 20.8%, and so we have landed at an OP margin of 11.9%. Up from 11.2. Next, if you will look at page 6, the balance sheet. Of course, we had to pay taxes, so the cash and deposits have decreased to 9.8 billion yen. And in June, we invested in a company in New Zealand, Stress Sense. So we invested a small amount, so the investments have increased. And in comparison to March, the transaction value in June is higher than in March, so the deposit received for consignment sales has also increased. And this doesn't directly impact the balance sheet, but in May, we sold 30.0 billion yen of shares abroad. Next, if you would turn to page 9. So this is just a breakdown of the transaction value. So ZOZOTOWN business was 40.3 billion yen, up by 40% year on year. And this is largely due to our growth is largely due to ZOZOTOWN and out of the consignment, 37.7 billion yen, up by 38% year on year. So this is growing very steadily. And purchase stock, of course, we've purposely shifted away from that. So this was minus 63%, and ZOZOTOWN was 2.6 billion, and up by 99% year on year. And B2B business has continued to come down as well. So this is a period of shift. So we're shifting right now. So it's 1.6 billion, down by 62%. So contributing factors I mentioned before. Next, page 11. So net sales for each quarter. This is, I've already mentioned some of these already, but ZOZOTOWN sales has grown. Therefore, you'll see the higher percentage of ZOZO use, proportion of ZOZO use. Actually, the net sales grew at a higher rate than the transaction value this quarter. And we haven't disclosed the paid membership ZOZOTOWN Platinum, but this has remained stable at nearly 1% of active users. So this has been stable at that rate. And next, if you will turn to page 15, SG&A was 8.8 billion yen this quarter against the transaction value was 19.4% last quarter year, and then it grew to 20.8%. So I mentioned this earlier, but the payroll purchase amount per shipment has come down. Those were the two main factors. But the promotion, as you can see in the line graph, it has come down from 1.8 to 1.5. So we've only really done retargeting ads. So the first quarter we hardly use any promotion costs, but we plan to use promotion costs in second quarter onwards. And on page 17, you will see the number of from here on forward, we will be discussing some KPIs for ZOZO. The number of total buyers or the active members has grown by 18%, 2.84 million year-on-year. Guest buyers has grown by 66%, 1.98 million. The unique users has grown steadily and very strongly, and the brand coupons have also helped activate dormant members. And in terms of guest buyers, we actually improved the usability for guest buyers significantly. So it's very user-friendly now. So this has helped us increase the guest buyers as well. Next, on page 18, you'll see the number of shops. First quarter, we added 14 new shops. But on the other hand, 39 shops have left the platform. So as the end of June, we have 842 shops, 3,538 brands. Of course, we added many shops, but depending on the aggressiveness or commitment to EC, we want to make sure that the relationship is win-win. So if it's not going well, the brand will leave the platform. So we asked them to leave the platform when they're not performing as well. So because we are adding so many shops, it's inevitable that we have to ask some shops that aren't performing well to leave. Next, this is the document indicating the new shops and the shops that have left. Of course, we have shifted away from the purchase stock business as well, but as I mentioned, shops that were not very committed to EC left the platform, or we have asked them to leave. We actually plan to open around 200 shops this fiscal year. Next, if you return to page 20, annual purchase amount per active member is up by 1.5% compared to the previous quarter. So it's now 48,644 yen. The number of items purchased is now 9.9 pieces, so up by 5.1%. And so as I mentioned, the brand coupons and also the new CRM system have contributed to helping improve the purchase frequency. Guest buyers purchase amount per shipment was 9,091 yen, down by 1.1%. But the number of items purchased was 1.7 items, which has grown by 1.2%. Next, if you would turn to page 22, the average retail price This is, I touched upon this, but the average retail price was 4,468 yen, down by 11.4% year on year. We've seen a double-digit decline in ARP since FY 2015 third quarter. The reasons are the proportion of products sold at a discount has increased, and we've also seen the proportion of ZOZOUs increasing as well. So this is contributing to lower average retail prices, and also we have welcomed many lower-end shops as well. So that has brought down the average of the full price of products. So these are the factors contributing to a lower ARP. But on the other hand, average purchase amount per shipment, as indicated on page 23, was 8,680 yen, down by 9.6% year on year. Of course, the factor is, one is the lower ARP. Another factor is the integration of brand point coupons. Of course, they are very effective, but they also encourage users to shop one brand at a time rather than across multiple brands. So this is a negative impact of the brand point coupons. So this is bringing the average purchase amount per shipment down, but users have begun to shop more frequently, so the annual purchase amount has grown. So brand coupons help increase the frequency and help get the users motivated to purchase, but they also prevent users from purchasing products from multiple brands, so this is bringing down the average purchase amount per shipment. Next, on page 25. I mentioned this earlier, but where we launch overseas, in the US, North America. So this is an area we will be focusing on. We just started this quite recently. As you can see on the slide, Vogue magazine has covered on the right, you will see WWD's article about Wear's launch party on the left. You will see an article on Vogue US. So they introduced our Wear app. And we have seen many more users upload in the US as well. And if you look at the launch party photographs, on the top, it's quite small, but on the right, the picture on the top on the right, or on the left, sorry, this is Jason Wu. So she's a designer of Michelle Obama's dresses. So he also came. And on the bottom, in the center, you will see a designer who designs for Lady Gaga, for example. So a very famous designer, and also he's also designed the cabin attendants' uniforms for ANA. So we had famous people join us on the launch party, and it was quite a success. And of course, we use promotion costs for this event. But this was an investment to make sure that Wear will become widespread in the US. And the timing is yet to be determined, but in the second quarter onwards, we will be doing some promotions for Wear and also the private brand. It's not finalized yet, but we will invest in our private brands promotion as well. So until the end of up to the end of the fiscal year, we will end up spending about 2% of the transaction value on promotions. And on page 28, this highlights our plan for FY 2016. We haven't changed this. Although we did very well in the first quarter than initially forecasted, the second half of the year will be key for us, so we haven't really changed our initial targets. Of course, we will do 2% of transaction value as promotions, but in order to maintain the high level of growth, we need new initiatives as well. So this is the end of my explanation, but maybe you can't see, but this Kurobeko, I think all the shareholders got this yesterday or the day before, but this small box, was passed out to all shareholders yesterday. And another thing, and I think you have the cookies that you have. There is it's like a fortune cookie, so if you like to see what your fortune is, please open the box. Now we would like to begin the Q&A. Only those involved in the market, please. And please state your name and the name of the company. And if you raise your hand, we will bring you the microphone. So if you have any questions, please raise your hand. Please, this is a good opportunity to ask you questions. In addition, I forgot to mention, but we have actually decided to split shares 1 to 3 as of the end of September. So we just released we just issued a press release about the splitting of shares. So this is my name is Shoda from Nomura. I have 2 questions. The brand coupons, brand draft, what is that about? And how is that shifting? That's our first question, my first question. And the second question, midterm goals or plans. You plan to do 500 billion and 50 billion in OP in 20XX year. Does this increase the overseas and private label? The overseas market and the private label and the new initiatives that you are implementing now, was this included in the initial midterm plans? Thank you for your questions. You mentioned the first question is about the brand draft. We will cover that. Saito will answer that. But second question about midterm goals. Of course, those initiatives and overseas and private label brand wasn't included. We have been talking about the 500 billion in transaction value as a midterm goal, but we have believed that this is a goal that we can meet with the existing business models. So initially, we didn't include the new initiatives, but of course, we will be launching a private label, private brand, and the other new initiatives. But right now, we don't know how much of the 500 billion will come from the private label or private brand. But as we have mentioned, we don't know by when. We haven't said by when, so we will continue to grow the existing business, and if the private brand goes well, And if it starts to comprise a significant portion of 500 billion, then we will be achieving our target earlier than we expected. And thank you for your question. This first question, the brand draft coupon. Until now, we chose the Waristas and then provided points to them to try to improve the conversion rate. So based on that data and consumer behavior, the brands also we have data now that certain Waristas contribute to better conversion rates. So the brands would select the Waristas. So the brands would sign a contract with those Waristas who contribute to their conversion rate, and then they would upload pictures of the brand's items. So this is the third time that we've done this. So we want to increase the number of brands involved in this brand drafting. About the brand coupons, of course, you have the brand Waristas and also you have the brand coupons. But you talked about how this is discouraging buyers from purchasing across multiple brands. But do you have a strategy that would address this to maybe have brands cooperating with each other? Or because this is, of course, improving your purchase frequency. So would you like to continue the way it is now? Or for example, you can have the brand Waristas, whatever they wore. Would they be wearing something from the brand as well as something from the other brands, maybe a combination of brands? So do you think there's going to be a new breakthrough in that sense? Is that something that you're thinking about? The coupons, of course, brand coupons, users tend to focus on one brand, but we only offer brand coupons for a specific brand for 1 or 2 days. So we only offer brand coupons for one brand every day. So it's just for that specific brand for that specific period, so it doesn't really affect the rest of the business. So a major factor is more the ARP, lower ARP. So do you think that because it's not really having that big of an effect, it's okay that you can just continue as is? Or of course, styling wise, Wear is more about coordinating different brands. And of course, so right now people are wearing different brands, but the brand draft, of course, that Wearista will be wearing more of that brand's product, but that's fine as well. But then, of course, they will also wear combinations as well. So they will just be wearing more of the same brand, but they wouldn't be only wearing that brand. So we're not shifting towards focusing on specific brand. We want to make sure that we make it possible for people to shop across brands, and it's a very big benefit for our users. So of course, we're not going to shift away from that. Thank you. Does anybody else have any questions? SBC Nikko Shoten Kanamori. I have 4 questions. Sorry. First, you mentioned that some of the brands have left the platform. Were they new brands that just joined, or is it a brand that have been on your platform for a while? Or ZOZOTOWN, the ARP has come down, so are these brands that are leaving the higher price range brands? We don't think that brands are not interested in EC anymore. So what are the factors causing the brands to leave? The brand coupons. How many coupons have you issued per quarter? What I want to know is that can you start to issue more coupons? And what are the off rates? And the third question, where the e-commerce transaction through where? You don't disclose this all every time, but you talk about how it's going well, and sometimes you don't mention it at all. But you're thinking that the brand point coupons are doing well. Do you see that people are purchasing directly on ZOZOTOWN instead of through where? How is the transaction through where right now? And lastly, the flea market business. Can you talk about where you are with that? And what about the monetizing schedule? Do you have any challenges you're facing? When do you plan to monetize? Thank you very much. So first question, the number in terms of the shops that have left this platform.
すみません、退店の方に関してはですね、この1Qで
In the first quarter, we've seen 39 shops leave the platform, and of which 14 was due to our shift away from the purchase stock business. And the 25 other shops. So we welcomed a lot of shops last year, but there were some that weren't very aggressive about EC. So majority of the 25 stores are brands that weren't too into EC. And then other reasons were the brands have gone bankrupt or they no longer exist. So we haven't seen any shops that are higher price range leave because the average ARP or ARP has come down. The second, coupons. If you look at our financial results for the recent financial results, the transaction value, majority of that has been reflected into the financial results, and most of the points that we actually give out to our users. The users use about 90% of the points. So you can think about the points we reward and the point that are used. It's almost equal. And in terms of where, there are seasonality elements, but every month the transaction value through where is about 1 billion yen. So the growth rate is about 200%. And then to add to the brand coupons, I think you talked about the number of coupons. In principle, we are issuing one brand coupon per day. So almost every day we issue brand coupons for different brands. So in the future, if we want to increase that, it will be 2 brands or 3 brands per day. But we are actually looking at that to see if that's a thing that we should do or not. And in terms of the flea market, we are working on that, and we haven't really done any promotions as well. So it's still for us a test marketing phase. And the application our app it's not perfect yet, so we're continuing to improve that every day. Is that okay? Does that answer your questions? Thank you. Are there any other questions? My name is Kazahaya from Deutsche Securities. I have 4 questions as well. The first question. So you will be adding 200 shops this year, you said. But do you see what kind of categories, what kind of fields? Can you talk about that? And then the second question, ZOZO use. So this is growing quite steadily. In order to increase the volume, what kind of challenges do you face? And how do you mean to address that? In order to increase the business, what kind of changes do you need to undergo? And the third question is your corporate structure. Looking back to the previous year, you purchased Aratana and you established the Start Today engineers. So you have started to employ engineers internally, but having done that, what kind of change has the company undergone? And in 2 or 3 years, what are the goals that you have for the 2 to 3 year term? So I would like to know more about your plans for the Aratana and your corporate structure, basically. And about where is my fourth question is about where. So why are you bringing where and promoting that in the U.S.? I'm not sure why is it. Are they business reasons? Why now? What are the objectives? Could you talk about that? Thank you very much. Thank you for your question. So if I can answer your questions one by one. In terms of the new shops, we don't think that the categories will be different from last year. So it will probably be a lot of lower price range shops, and maybe we can't mention the big brands, but we are going to be welcoming quite a few big brands as well. But it will be very similar to the previous year. And about the used business, we are already facing some challenges. The operation cost increases as the volume increases. So used products we have to do operation per product to take up pictures, to upload it. So it's a little bit different from ZOZO. So of course we need to try to make that operation process efficient. So if we don't work on that, the profit margin for ZOZO use won't be improving. And the third about the engineers, including Aratana. Start Today engineers. It's easier for us to employ engineers now because the location of our office is in Aoyama too. So moving our offices to the center of Tokyo has changed the number of applications that we receive. And because it's an engineering-focused company, unlike before, we can do development management as an engineering company. So unlike being part of Start Today in the past, I think we have been able to improve the level in many aspects. Of course, this also includes R&D, purchasing the Stretch Sense from New Zealand. They have sensor technologies, and it's a different company for us to invest in, but we would like to use that kind of technology to develop something new. So that's an area that we can also look forward to. And about where, we have talked about implementing where across the world, and as part of that initiative, we need to make sure that we're popular in the US, otherwise we won't be able to become popular in the other markets. So of course we needed to enter the US market at one time or another, and we have entered the US market before and didn't go well, but this time we have come up with a plan that we think will work for the US market. So that is why we launched We're in the US. And there's another company. There's a company that we're investing in the U.S. as well. So I think that this is a good timing for us. Does that answer your question? Thank you. Does anybody else have any questions?
はい、一番最高列の方お願いします。
Tomimatsu from Mizuho Securities. I have 3 questions. First question, the number of DAUs for your apps, how has that shifted since last year? Has it been growing at the same rate? And is that why the conversion has gone up? Or is there any change with the DAU? And that's why you're seeing the results that you are? And also the quality of your unique users and how they navigate within the app. So can you talk about DAU and the unique users' behavior, if there is any change within that? And the second question is, you talked about private brands a few years ago, and at that time you mentioned that the brands weren't very happy, or you mentioned that they weren't very happy about that. But have you seen any change in the brand's reaction? And if their reaction has changed, why do you think it has changed? Is it because you're a more powerful platform, or even maybe their reaction is the same and they're very negative about it, but do you still think that it's a worthwhile investment? So can you talk about the brand's reaction? So could you talk about that, the brand involvement, if there is going to be any, as much as possible? And then the third point is the brand coupons and many of the products being sold at a discount. Do you think that the proportion of goods sold at a discount is too high, and would you like to bring that proportion down? I think that the discounts are decided by the brand, so it's not something that you influence, but is there a change in terms of how you see the proportion of products sold at a discount? So first point about the DAU. So we can't disclose data, but last October we renewed the app. So before and after the renewal, the proportion of transaction value via the app was about 10% before, and now it's around 15%. So this is before and after the update. Before it was 10%, after it was 15%. In terms of their behavior navigation within the app, I think it's easy if you think about these characteristics of PC and smartphone. Of course, PCs, it's easier to navigate on PC, especially, and we've seen users on PC stay longer on our website than smartphone users. And in terms of the private brands, a few years ago, yes, I don't think we said that their response was negative. I think that I feel like you mentioned that it was they were concerned. I think they may have been concerned, but I think that we didn't do the private brand a few years ago because the concept wasn't clear yet how we would be selling it. But of course, this time we are saying we would like to do a private brand, but we haven't disclosed what we're going to be doing, how we are going to be doing it. So right now they haven't reacted, but I think they're just waiting and seeing what we're going to be doing. But for us to do private brand, of course, it doesn't make sense if the brands react negatively. So of course, that is something that we will keep in mind while we plan the private brand. And in terms of the proportion of products sold at a discount, brand coupons does not really have anything to do with the proportion of products sold at a discount. It's not a sale, because you can use it for full price products as well. But having said that, the proportion of products sold at a discount is increasing because there's a lot of our users who are purchasing products at a discount, and there are some users who only purchase during a sale. But this also applies to the offline stores as well. So I think that in the real world, the proportion of products sold at a discount is increasing as well. So for us, we haven't really changed our thinking. We think it's quite inevitable. It's the way the world is shifting. So that's how we feel about the situation. I would like to confirm about the DAU. By updating the application, you mentioned that the proportion of sales through DAU has enhanced. So this has continued to grow. But outside of applications, has the growth grown outside of the app? So of course the app usage is increasing, but it's only from 10% to 15%, so it doesn't have so much impact overall. And the results for PC is increasing as well, but year on year, the DAU has grown by 20%, give or take. So this is also applies for PC as well. So many factors contribute to this, the number of brands, and also from 2 years ago, we have committed ourselves to starting from scratch again to make sure that we enhance the usability. And I think that has contributed to this, and it's not so much the application. Are there any other questions? Thank you for many questions. We would like to wrap up the Q&A session. Thank you for joining us today for today's announcement of the FY2016 first quarter consolidated business results. Thank you for making time out of your busy schedule to join us.